Shifting our attention now to the RBI press briefing coming in. Let's cut across.
Some detail about our assessment of growth and inflation which has gone into these MPC decisions. First of all, growth. Economic activity has remained resilient, with growth of real GDP surprising on the upside at 7.8% and GVA at 7.6% for Q1 this year. As suggested by high-frequency indicators available so far, domestic economic activity continues to sustain momentum even in Q2. Looking ahead, an above-normal monsoon, good progress of Kharif sowing, and adequate reservoir levels have further strengthened prospects of agriculture and rural demand. Buoyancy in services sector, coupled with steady employment conditions, are supportive of demand. This is expected to get a further boost from the rationalization of GST. Rising capacity utilization, conducive financial conditions, and improving domestic demand should continue to facilitate fixed investment. However, ongoing tariff and trade policy uncertainties will impact external demand. Prolonged geopolitical tensions and volatility in international financial markets caused by risk-off sentiments of investors pose downside risks to the global.
Let's go across to my colleague Hina Gambhir joining us on the broadcast with the details of what this means for us. Hina, all eyes were on the repo rate revisions amid the tariff tensions with the United States, the GST reforms that have been brought in as well. The repo rates remain unchanged. What does it mean for you and me, for people across the country?
Well, not much really is going to change for those who've been looking to, take loans or something, because in this policy, the Reserve Bank of India has left the repo rate or key interest rate unchanged at 5.5%. Pratibha, if you see the year 2025, then since the beginning of this year, the Reserve Bank of India has already slashed the repo rate by about 100 basis points or 1%. Now, that entire 1% has not been passed on to the consumer. So that's one thing that the banks, of course, will have to now focus on. In this policy, even though the growth number is looking very good, our inflation has remained under control as well. There were some people, some economists who were still expecting that, after seeing 1% cut already this year, perhaps in this policy also the Reserve Bank of India could give us one more cut of about 25 basis points, because right now we have a lot of uncertainty because of the Trump tariffs. We don't know how much it could really impact our growth prospects going forward. But a unanimous decision has been taken by the Reserve Bank of India in its monetary policy meeting, and that is why they have kept the rates unchanged at 5.5%. So immediately, of course, it's not really going to make any change to our lives, those who have home loans or those who are looking to take home loans or any other loans. But there is a backlog there. If, perhaps after this policy, banks decide to pass on some of the benefit that was already given to them by RBI in the past, then of course there could be some impact. But following, this policy decision, there's not going to be an impact. Some very important points the RBI governor was also, making at this point in time. Our inflation level clearly remains under control right now, but focus, of course, is going to be on the global environment. Global uncertainties still remain, and that's the reason why one will have to tread cautiously, and that's the reason why the GST bonanza that we've got, that is expected to boost consumption. So this is something, the RBI governor also highlighted in his address today.
Okay, all right. Hina, thank you for joining us with all those details and putting things in perspective.